Hi everyone, it's Paul Brown here from Wealth21. Put together a market update as at 31st of July 2022. First of all, and importantly, anything in this video is general information only. If you need any advice relating to your specific circumstances, give us a call or seek advice from an authorised financial advisor. So first of all, I just want to have a look at the returns up to the end of the financial year, 30 June 2022. And the important thing to recognise is in the last 3 months, 6 months, virtually all sectors except cash and infrastructure have had losses recorded. Very, very unusual circumstances, particularly with defensive asset classes like Australian bonds and global bonds recording losses as much as 10% over the past 6 months and 12 months. When you look at the longer term returns though, over 5 years and 10 years, you get results that you would expect with defensive assets, interest rates being very low. Defensive assets have produced very modest returns over the past 5 and 10 years. And the growth assets in shares and property have provided the highest returns over the longer term time periods. So let's move on to firstly inflation. Inflation has increased recently from 5.1% to 6.1% in Australia. And the interest rates, the Australian Interest Rates Reserve Bank has recently increased interest rates to 1.35%. We are at this particular point in time aiming to curb inflation, of course. However, what we've seen in the bond markets, in June we saw that spike in the Australian 10-year bond rate up above 4%. In recent weeks though, during July, we've seen the bond rate, the 10-year bond rate, come back down a little bit, more towards 3%, reflecting perhaps that the market had factored in interest rate increases that maybe we won't see. So that's been good to see a moderating in the bond rates. And that's also been reflected because when bond rates reduce, the price of bonds increases. We saw that very steep fall in bond rates, particularly during 2022. But in July, we've seen the price of bonds actually increase as the 10-year bond rates have come down. This is just a composite bond index, but we've seen an increase in bond prices. So moving on to the Australian share market, and this is just an update on the chart I showed last month. And in 2022, we've seen those, it's been very choppy. We've seen a 10% fall and then a recovery, then a 15% fall. And during the month of July, we've seen the Australian share market make a partial recovery from that 15% correction that we had. Of course, this is a 5-year chart, so it shows that very steep fall back in 2020 due to COVID. The US, turning now to the US inflation rate has just reached 9.1%. And so that is also leading to the US Federal Reserve increasing interest rates, and they increased at another 0.75%, and they're up at 2.5% now for US interest rates. Very steep increases from a quite low base earlier in the year. And looking now at the world stock market, so this is a combined world stock market index, and we've saw that similar to the Australian share market, we've seen a little bit of a recovery during the month of July. The economic news may in fact get worse, but the markets are generally anticipating economic news ahead of when the economic outcomes are there. So, and finally, just one chart that I wanted to finish with, and I mean, we obviously do a lot of work with our clients to make sure that we've got the right strategy in place and that we've got good quality products in place. However, the most important thing is that that people exercise patience with their overall strategy. And this is a chart from a US guy called Carl Richards' Behaviour Gap, and I think that chart explains that patients with investors have to excuse the US spelling of behaviour, of course, but that investor behaviour is very important in determining people's long-term returns. So there we have it. If there's any questions, of course, please feel free to give us a call or send us an email. Thank you very much.